All right, everything looking good. We are live. Go ahead and do this. Welcome back to the channel, Crypto Trend Trader, with our midweek market update. It is 8:02 p.m. Eastern Standard Time on 11/2/2022. And as always, before we get started, just want to remind you, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, what's going on in the chat? Parag, what's up? So big day today, the big long-awaited Fed meeting. And of course, as predicted, as expected, what did we get? 75 basis points. No surprise to anyone. The market apparently was surprised as it rallied leading up to it and then dumped afterwards as reality set in. And of course, what we can see here all the way on the left is the power team, the two-man double. The tag team is back in action. TNX showing some clear strength off that 21 bounce on the daily, as well as the DXY getting ready to confirm an 821 bull cross back to the upside. And once again, that this party ain't over yet. So what does it mean for everything else? Well, I think we know what it means, but let's take a closer look. So one really important thing is Powell did reiterate multiple times, multiple different ways during the conference as the reporters basically tried to trick him into giving the market any indication that they could possibly even rally, even if it was false, just begging for anything. Powell was very, very clear that they weren't even thinking about slowing the rate of increases, let alone taking a pause, let alone decreasing the rate of increases, let alone stopping increases, let alone pivoting. So basically, Powell made it very, very clear, sent the little kids back to their rooms, and now the adults are back in control, having a conversation. So that being said, we know what it means. We know exactly what that means. We know that the higher rates go, the lower forward valuations on companies are. And, arguably somewhere in there falls non-profitable companies and cryptos. So that being said, the higher the rates go, the lower the valuations go. So we just hit 4.0 officially on the Fed funds target rate. Assuming we're going to get another 75 basis point hike, which seems very likely, and Powell definitely, said it without saying it, in my opinion, that puts us at 475 by the end of the year. And I believe your boy has been calling for 5%. So we're very, very close to another one of the 8-ball predictions coming true. Big surprise? No, of course not. Of course not. So TNX obviously surging up here, currently at 4. So, realistically, we know the Fed's target rate is 4. So TNX is at 4. There's typically a spread based on duration. Obviously, we have some weird stuff going on with the yield curve, all the way from like the 3-month super short duration to the long-term, like 30-year, all kinds of inversions and everything. But typically, we'll see some kind of spread between the Fed funds target rate or effective rate, whatever you're looking at, and the 10-year. So again, that implies that we're going to see higher targets. So no surprise. Now, again, as we go sideways above a support level for an elongated period of time, and we see the indicator oscillators trending down, what look like bearish divergence and potentially a top, in all actuality, starting to look like a little bit of a bullish reset. So we'll see what happens. I would expect what's likely to happen is we're going to see a little bit of pressure come off of the TNX and the DXY, depending obviously on not just market expectations, but also what comes from the ECB tomorrow. I'm sorry, the BOE tomorrow. So if the Bank of England, and we'll talk about that a little more with the TXY, but if the Bank of England doesn't do 75 basis points now, even though that would still put them only at 3 and the US is at 4, the gap, the spread between the two would widen. So now that puts extra pressure on the Bank of England. So UK, expect either 75 basis point hike or more inflation. as essentially that would be further devalue of the currency. So we'll see what happens. Obviously, that would cause strengthening of the DXY if they don't hike 75 tomorrow. So TNX still very strong. Obviously, bond market still trash. This does look pretty toppy right now, though. But again, as we're seeing the stochastics coming down here, they're putting in new lows. And then here on the lows, we're not seeing that same low reflected. So now we're starting to see bullish divergence developing on the stochastics. And we just had bearish divergence. Arguably, the bearish divergence played out. And all it was is a back test of the previous high. Now, if this slope line flips red, if we continue to see red histograms, if we continue trending to the downside, that's completely possible. And we could come down here and invalidate that potential bullish divergence. We don't know technically until it pivots. But we know that now, with this low right here, from that previous little push down to 3.589, we now know if we don't take out that low right here, when we push down here, we will 100% print bullish divergence because we've already taken it out on the stochastic right here. So essentially, that's the level we'll be watching. So, you guys know, obviously, we're consistently looking for not only our horizontals based on our Fibonacci's and stuff like that, but we're looking for swings. And then inside of those swings, see, obviously, this is a significant swing. This is a much less significant swing right here. As a matter of fact, there's very little this swing could ever do to become as important as this one right here. But it's still important nonetheless. So the minute we come down here and put in that low, and then we go past the previous high right here, we're looking for that support where the previous high was. And then if that breaks, we're looking for support where that previous low was. And then if we start taking out previous lows, it's going to start looking like we're trending down, et cetera, et cetera. But the fact of the matter is, again, this is looking more like a bullish reset to me than anything. And we obviously know how, again, everyone's trying to call the top on everything or the bottom on everything. And the truth is, things don't top when everybody expects it, and they don't bottom when everyone expects it either. So could this bottom? It could. It definitely could. This was our weekly candle. It is red from last week. We're in the bullish control zone. We're technically now have a red histogram, for now. We're basically printing, potentially a double top right here on the histogram. And we put in a clear higher high right here. So technically, potential for divergence there as well. But we have to see. We could easily just push up and immediately invalidate it. Very strong still, in my opinion, on the weekly. Obviously, we have the 200 exponential strengthening to the upside, and it has passed over the 200 simple, and they're both blue. So now here on the monthly, again, everybody was calling that was the end of days for the yields, and that was the top, and it was time to buy bonds, and blah, 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 blah. Have fun staying poor. No, have fun going poor, because you can't be wrong this many times and not be poor yet. That's the weird thing about, finance, like YouTube and finance online and everything. All these people are always wrong, and yet somehow they're not broke. Like, are they even playing the fucking game, or are they just sitting on the sideline pretending or telling other people what to do? Like, do you even invest, bro? Do you even trade, bro? It blows my damn mind. I'm like, there's no way this many people can be this wrong all the time, still have credibility, or still have money, or both. And yet, it's almost like they're somehow making money off of people other than their actual like good investing or trading skills. It's so weird. The like closed captions right there just were like all capital letters sarcasm like shows up across the bottom of the screen. So TNX still looks very strong. It looks very fucking strong. All green histograms, blue slope line, inside the bullish control zone. Stoch's not powerfully angled to the upside, but still bull posture, positioned correctly. We're now above the 200 exponential. We're now above the 200 simple, and we're literally, I would say like days away, but we're on a monthly chart, so probably like 30 days away. So is that still days away? We're a month away probably from confirming a blue slope line on the 200 simple for the first time since it flipped bearish in 1991. Okay, so 1991, so 30 years. Oh, that's weird. So we had a 30-year downtrend when risk on assets went parabolic. A 30-year bubble got blown this whole way down, and now we're just now flipping it back. So everybody's trying to call the bottom literally at the beginning of the trend reversing. If what I suspect, if what I've been calling for over the last, year and a half, 2 years, whatever, is the reversal of this 30-year downtrend in yields, that means we've been in a trend for 30 years. Everything that happened in 30 years is one direction. And now we're just now beginning. It doesn't have to be a 30-year trend, but let's just say it's 10% of the 30-year trend. So if we had 30 years up, now we have to correct for 10% of that. So let's just say roughly 10%. So that's 3 years. So we're at the very beginning of a potential 3-year trend, an uptrend on yields, therefore a downtrend on all asset prices globally. I mean, I hope I'm fucking wrong, but I don't get to pick when I'm right and when I'm wrong. I hope I'm wrong. But it sure looks like a trend breakout to me. Sure looks like a very, very clear downtrend for 30 years, and it looks like we're breaking out of that downtrend. Now, it doesn't have to be that way, but I mean, we're above the 200s. We broke down through clear resistance. We're breaking out through key fib levels, consolidating on top of the 618. The next target to the upside is the 786 in red right here, or the 1.382 fib extension from the high before the crash to the zero line at 7.13. I've been calling for 5 for a while, but once we hit 5, and we don't just give up and stop doing technical analysis. We just look for what's the next target. What's our next stair up? Because we know we're just going up and down stairs. Never straight up, never straight down. Well, never say never. Not very often straight up, not very often straight down. But I mean, this is still very, very bullish on the monthly. All grain histograms, blue slope line, we're above and ready to flip the 200s. I mean, if you literally ask me, hey, what is the one time when you would want to have the least risk on positions in your entire life? If you told me the entire time this was red, risk on was the best investment you could have. Matter of fact, the riskier the better. Matter of fact, for 10, 20, 30 years, I don't even care if a company makes money. They could have my money because I believe. That's exactly what's been happening. So now that has changed. Now you better fucking make money. And not only better make money, have income, you better keep that money or return it to shareholders. Or else you ain't getting my money. So all this time, the one time I would be very, very cautious, or very, very conservative, or very, very, just risk averse. Right now, this looks like danger to me. And it's happening in real time. That's the beauty of it. I'm out here sounding the bell 3 days a week, warning people what might be coming. And if you've been following the channel for, last 2, almost 3 years now, even last 6 months, I guarantee you, we've been able to get in front of at least 1 or 2 or 3 or 20 big trends. And I don't just come out here and tell you, hey, get out of this now. I don't just give you a ticker. Hey, buy this ticker now. No, I don't do any of that. Obviously, none of this is financial advice. What I do is teach you what I found that works and show you in real time it working. And, tell some terrible jokes and try to entertain you a little bit as well. But that's it. So let's see what happens with U.S. oil now. We had this, again, shorter term, little downtrend right here, threatening the 200 exponential and simple, back tested the 200 exponential. We said if we can put in a higher low, which we did, we're likely to come up here and test the 200 simple. So we maintained inside this green channel after the breakout of the yellow channel. And now likely, after this higher low, we're headed up here to test the 200 simple. Because that's our next step, our next target to the upside, $98.30. Hang on one second, I'm going to take a drink. All right, so we got VIX is next. Not much going on with the S&P volatility index. We came down, we retested the 200 exponential and simple. We retested the bottom of our deleted chart. I mean, really? Did we do that? So that's it then? We're just... All right, that's it. There's no VIX chart. Sorry, guys. At some point in time, I guess we could do a full redraw of it in real time. But, you know, realistically, we have a pretty clear set of swings down here. Depending how we want to draw that, if we want to draw it in real time, we would have drawn it off those two lows. And then this was kind of our fake out. Alternatively, you could draw it like that. It's not really relevant right now. I would be looking at it how we've had it this entire time, which is basically just this ascending support with the one little breakout from the bottom. So we're kind of touching down here, something along those lines. So we're at support. We're at the 200s. And then obviously resistance wise, again, you could draw it multiple ways, closes, however you want to do it. The point is we're looking at this triangle. And when we're reaching the top of the triangle, we're probably getting ready to top out. Obviously, that's our resistance. When we're at the bottom, support. So we're at support. So likely volatility getting ready to take a next leg to the upside. We know if and when we break out of this range, get a confirmed breakout and the trend reverses or, you know, picks a direction, since technically we're just consolidating. You know, if we break out to the downside, lower volatility, less uncertainty in the markets, more confidence in the direction of the economy, globally, locally, you know, et cetera, et cetera. Break out to the upside, that's a volatility spike. That means, hey, something's going wrong, black swan event, you know, crazy credit crisis, war, who knows what it's going to be. So VIX is flip slope line red on the daily right here, all red histograms inside the bearish control zone. So if it wants to break to the downside, now looks like a pretty darn good time. Unfortunately, it is at support. So we have one thing telling us, hey, we could easily go down from here. We have one thing saying, hey, we're probably going to find support right here. So in my opinion, you know, probably coin flip. And when it comes down to a coin flip and we're trading inside of a range, I always give benefit or favor to the range. You know, basically saying, hey, when we're at support, we're probably going to bounce. Hey, when we're at resistance, we're probably going to bounce. Indicators and oscillators can get tricky sometimes. You know, clear support and resistance, typically about as reliable as it gets, especially horizontals. Dow Jones Industrial. So we talk about, hey, we probably topped. We did the exact same thing last time. We came up here, we touched a 200 exponential and simple, and then hung out for a second, and then rejected. So today, Dow Jones pushed to a new high, and then, of course, you know, as soon as Powell reiterated multiple times that there is no pivot, there is no slow, there is no pause, there is no swivel, there is no fucking whatever other bullshit people are, you know, betting, praying, hoping, you know, selling their soul for because they're desperate in these markets, then reality strikes. And look, you know, one of the most disgusting, volatile days the Dow Jones has saw in a while. Here, at least, the disgusting volatility was to the upside. You know, it's just a crazy amount of volatility all in one direction from a gap down low. But here we actually push up and then come straight back down. I mean, very violent day in the market. Crazy to not see volatility move more than that. Obviously, a lot of it has to do with the duration. I mean, we're basically, the way I look at it is, you know, and this is fully exaggerated, but there's like, you know, investing and then there's trading. Okay, investors are like looking for long time horizon, you know, years, like probably long-term capital gains to like lifetimes. Like, hey, this is an investment I'm just going to keep adding to my whole life. I'm never going to sell it. And then there's traders. There's lots of different traders. There's people that are trading, you know, 20 times a day. There's people that are trading, you know, a couple times a month. There's people that are trading all sorts of in-betweens, you know, swing trading, crackhead time frame, like, you know, trading, whatever, like, you know, tick by tick traders, high leverage traders. What we see right now is, you know, and obviously we could be looking at the S&P, but it'd be the same as looking at the Dow and then comparing it to the volatility index. We see we're at relatively high volatility compared to normal. Normally we're around 20. Right now, you know, we're up here, what I say, 25. So 20 is still decently volatile. 25 is pretty damn volatile. 26, especially just to hang out at. So why aren't we seeing like actual big spikes in volatility with everything going on in these markets right now? Because the duration, the VIX is more led by longer duration. You know, it's 1 month out And what we're seeing right now is crazy amounts of short duration options trading taking place. That's not really, options are still trading, but they're more like betting. You're saying like all or nothing with those options. And that's what's driving a lot of the volatility in the market. So because that's not actually measured by the VIX, because it's short duration options, 1 and 2 week options, a couple days till expiration type stuff, we're not seeing it reflected appropriately in the VIX, which just measures 30-day options on the S&P 500. So very, very interesting that in all actuality, something that we've grown accustomed to, such as the VIX, on a crazy volatile day like we see today, we barely see anything reflected here. Even though we're at elevated levels, you would expect a moderate spike in the VIX with all that going on. I mean, if we just jump over to the S&P, you would think, if you showed me this and say, hey, what's the VIX look like? I'd be like, oh, probably that exact candle, but green or something like pretty close. That's not what we see. That's not what we see. So again, we're seeing a divergence between, what traditional methods or measures we would use in comparison to reality. Now, what does it mean? Should we stop using the VIX? We don't want to, no. It just means there's some sort of, I'll call it a phenomenon, an event, whatever going on in the markets right now. And a lot of that is basically levered speculation. Part of it has to do with lack of liquidity. Part of it has to do with, too much liquidity over the last couple of years. Part of it has to do with some players needing to get shaken out of the market. But again, very, very important to pay attention to that. So just because we're not seeing it reflected in the actual VIX, the volatility index, the traditional measure, does not mean that right now is not volatile times. Because I'll tell you right now, it's volatile. So Dow Jones getting rejected at key levels, another rejection off 200 exponential. We know what happens. Once we lose the 200s, we go into a bear trend. Once we go into a bear trend, we put in a new low, then we backtest the 200s, then we put in a new low, then we backtest the 200s. So we know what's next. We're just walking down the stairs. Oh, look, we're walking down the stairs. Okay, so what's next? New lows. Where are those new lows likely to be? We don't know because we deleted all of our charts. Did I really delete everything? I must have. So if we just put a fib in from the lows right here to the highs, we came down, we almost touched our target, the 382, and then we bounced all the way back up. So likely we're going to come down here now. We're going to get our nut. We're going to reach that 382. We're going to get our target. We get that like little told you so emoji pops up. Told you so. Told you so. Told you so. Little jiffy in the bottom. Told you so. Told you so. That's where we're going. But you guys already knew that. Trying to build some momentum right here. Looks like it's kind of topping out. Does this have to be the end? Does this have to be the rejection? Obviously, we see this key purple line going back here. Like, you see where we touch it right here. Okay, that looks important. And then you see, we kind of double top right here. That looks important right before the Black Swan event, Rona dump. I put out a video here about how the stock market was getting ready to dump, get ready for the big one. And then, of course, obviously it played out perfectly. But after that, we broke above it. We went parabolic. And then we reverted to it. We backtested it, couldn't get above it. We went to new lows. We backtested again. That's where we're at. And you're like, well, what's that purple line? And who even cares? This is going back to 1929. The what? Hang on. That's correct. 1929. That was the peak. And if you connect that peak with the peak from 2000, that's our purple line. And that just so happened to be, within pennies of our peak in 2018, our peak in 2020. Oh my gosh, that's so weird. All these very important times. And that's basically what we're backtesting right now in real time and getting rejected off of. So important level. Worth paying attention to. So obviously that would have been a key level to reclaim. So if we got back above that level, if we still do, we got back above the 200 exponential and simple, we flip them back blue, we start trending back to the upside. I mean, things could change, but we are looking like we're rolling over here at resistance. Looking like we're rolling over. The monthly close on the Dow was very good. We talked a little bit about this and how this would be the last attempt from the bulls to essentially save the trend. Because we know what happened here. You know, we broke down, we crossed the 8 and 21 on the monthly bearish. Very, very bad sign. Typically what we've done in the past, you know, at very, very key levels. You know, this was obviously 2020. As soon as it flipped red, that monthly candle is where we bottom. So the market, again, trying to pull off that V bottom, does not want to end up in a situation like this. You know, 2008 or 2000, where essentially we get a very, very deep retracement, potentially down to the 200s. So this is the market attempting. This is all that money we talked about, all that power, that 1%, the 0.1%, all the people that are in control that have a vested interest in the system as it is. Because you can only fight bots and algos and, you know, the trend and markets and, you know, supply and demand, aka buyers and sellers, for so long. Eventually the market wins. So this is it. This was the big push. We're going to find out this month or over the next couple of months if they did it or not. They got the close. They got the print. This was a very, very strong candle from the bulls. Very, very strong candle. Part of why to me it's bullshit though, if we would have seen this, and I'm not saying it can't play out bullish, but if we would have seen this on the S&P also, and or the NASDAQ, and or the Russell, it would be a lot more convincing. So we'll see what happens, but this has not changed anything for me. It was a very bullish candle. Very, very bullish candle. We're going to find out in the next couple of days if it holds up or if it was literally just that print. So here, let's look at the SPY. Obviously, you know, got wrecked, melting down now. Didn't even get near to the 200 exponential and simple. And then we're just going to skip over the monthly. And again, look at this monthly in comparison. We didn't even get back on top of the 8 and 21. You know, and then even after we gapped up here, we basically have just melted down. Now, we have all month to decide what happens. We might end up with just a super bull month V-bottom candle. And, you know, that would look good. It would look like essentially what the S&P did back here. Kind of like looks like what the Dow's doing a little bit. If it's sticky. And I'm not going to sit here and say it's not possible. Because who knows? Maybe something does break. Maybe the Fed does pivot. Maybe blah, 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 blah. I don't know what it's going to be. But we're not going to rule it out. There's no certainties in these markets. We may speak like we have certainty sometimes or act or, you know, joke around. But the truth is, you know, it's all about probability. You know, it's calculated risk is what this is all about. You know, that's everything that we talk about, everything that we teach, everything that we preach. Calculated risk, probability of success, position sizing, put it all together. Calculate out that risk reward ratio, and over time, I mean, you're going to win. We're basically just acting like a casino, essentially. You know, they talk about the casino has an edge. Oh, the casino has an edge. So when you play enough hands, or you roll enough dice, or you spin enough wheels, or you throw enough balls, well, there's like the one ball in the roulette thing, and you don't even get to throw it, actually. The dealer does. But you get my point. You do that enough times, the casino has an edge. The casino makes money. That's all we're doing. We're just being the casino for the markets, essentially. We're being the dealer. We're taking that edge, and then we're just using it. We're just doing it from our own screen, on our own time. All right, so triple Q. I mean, we're very close to new lows here. New cycle lows. Very, very close. It's a pretty disgusting candle from the Qs that are horribly underperforming. Barely even crossed the 821 bullish, let alone get on top of the 200s. Pathetic. So people have given up on tech. People have openly admitted with their dollars that they vote with every day that tech is trash. Interesting. So probably triple Q headed down to 219. And that would be our monthly close from February 2020. We got a couple levels on the way, but I mean, this looks disgusting. We're literally at the lowest. You know, if we close right now, obviously the monthly just opened. If we close right now, new monthly low. New cycle monthly low. And everybody's trying to pick the bottom right now. And we know Markets don't bottom when everybody's looking. I've said it before. Markets don't bottom when everybody's looking, when everybody wants to be a buyer. Markets bottom in the middle of the winter on a cold night when it's dark and lonely and everyone else has broken and there's only one or two or a few people left that care, that are interested, that are even watching. That's what it looks like when markets bottom. Not now, when everybody's looking. Hell no. IWM, Russell, the old Ruddy 2K, did backtest the 200 exponential and simple. So actually held up, didn't put in a new low for a while. That was good. We know why that happened. It was because, basically everybody's trying to pick the bottom and they assume that growth is going to outperform value and blah, blah, blah. Small cap growth historically outperforms coming out of slowing time, blah, blah, all that trash that they use, all these garbage statistics that they use that have been wrong, but they just pull up. Not going to happen because we're not bottoming. But they still think we did because we didn't put in a new low. Russell shoots up here, backtest at 200s. Looks damn near as bullish as the Dow. But in all reality, they don't even have daily charts on their screen. They can only look at 4 hours and below, let alone to look at a monthly chart to see that the Russell looks absolutely atrocious. I mean, it looks absolutely disgusting. Absolutely disgusting. Backtesting the 8, getting rejected. Bearish control zone, all red histograms. This thing looks ready to puke. Russell's going to be at 146, down another 20%. And then you're going to see out of the corner of your eye, and then you're going to hear it repeat over and over again. Told you so. Told you so. Told you so. Told you so. It just keeps popping up. Like one of those virus-like windows from the 90s. It would just pop up the thing and you can't even close them quick enough. You're like, oh, what was I looking at before that happened? I don't remember. I don't remember. XLE. You guys know. You know what you did. Energy, I mean, looking pretty double toppy right now. We'll have to see, though. We'll have to see. The aggressiveness of the reversal on the knife tells me that this could have some legs. The knife is definitely flipping the script pretty quick. So it could have some legs. We're about to get the 821 cross, likely. Still well above, exiting the bullish control zone. Once you clear the 786, historically speaking, the likelihood of a rejection in between there and a double top, not very likely. Doesn't mean it can't happen. And it sure looks like it to me right now. We'll have to see. We will have to see, but looking pretty toppy right now. It's only one candle in, but it did basically engulf like the previous 3 right here. The real question is when and if it sells off, does this level hold? If this 85 holds, that's key for energy. If it does not, then we probably retest the 200s, and then the key is really just to maintain this higher low. So if we come back down here again to the 0.5, to the 200s, to the descending resistance slope line right here, that's a buy for me. It really is. I think that's a buy for me. I mean, we'll see what happens. Maybe that changes if we, take a position and then it starts going against us. But realistically, I mean, the 2 main levels, if you're still bullish on energy, which potentially, we are, nothing else is really emerging right now. And it's not looking like we're going to make any kind of progress anytime in the near future, as a world. I would say probably we buy the 200s when we get there. We buy the higher low when we get there and just look for another bounce. This seems like a likely area. We broke through this descending resistance from the top 2 points right here. It seems like a likely area. We come back down, we intersect with the 200s at that level, and then we just, off to the races, new high. Now we'll see what the indicator oscillators look like when we get there. We'll see what the environment looks like when we get there, and then play it by ear, but there's definitely some potential setting up. Because again, the difference between the actual underlying asset itself, the energy, and the XLE, which has a lot of, primarily big oil like producers in it, making up right off the bat, 50%. They really don't need prices to be at 85 or 100 or 120 to make money. They're pretty damn happy at 60. And I'm not sure that I see oil dropping below 60. Matter of fact, I don't think it's going to happen. So honestly, I really think the oil producers, energy companies, legit, actual, real profitable energy companies, and some other speculative ones too, but legit, actual, profitable energy companies. I mean, I think they're going to go from the ugly duckling to the motherfucking, what does she become? A swan? Is it a swan at the end? From the ugly duckling to the fucking swan? Hopefully not a black swan. Oh shit, are you even allowed to say black swan? Whatever it is, a pigment differentiated swan. I don't know what I'm allowed to say anymore on the internet. Fucking Google. All right. So anyway, my horrible jokes. Transportation looking terrible. Another lower high, looking like trash. Headed down here to the new lows. New cycle lows. The lowest low. The low. The low low. They have to make a nickname for just trash bag assets that are making new lows consistently. Transportation looks terrible. Oh my gosh, that's so crazy too. That's one of our 4 horsemen. So when transportation looks like shit, we're probably at the end of some massive cycle. I mean, like a big cycle, not just some like 1 or 3 or 5 year cycle. I mean, some crazy like 30 years. It's crazy. SMH, oh my gosh, same thing. That's crazy. One of the other horsemen, where's he riding off to? I mean, down the mountain now. He's riding up the mountain for a long fucking time, riding up the mountain. And now where is he going? He's going down the mountain. So SMH, semiconductor ETF, again, confirmed into a bull market in 2010. That was 12 years ago. And now we're getting our first correction in 12 years. And that's in the middle of a 30-year trend, potentially, reversing. Wouldn't be surprised to see this thing get a 50% haircut over the next, months or years. Remember, 10% of that 30 years is only 3 years. Well, what about this 10-year little move right here? Let's not even look at that 30 years. What's 10% of the 10-year move that we just got? That's a year. So if we spend a year correcting, is it crazy to think the semiconductor ETF could be at $100 by then? A year from now. I'm not talking about like, oh, you said a year. It's been a year, sir. We're done. The correction's over. You saying new all-time high, sir? Sir? Hello? Sir, question? New all-time highs? XLU. Backtest. And look at that. So we got rejected at the fib. We got rejected at the ascending support line. So this is worst case scenario. This is literally, we talked about this. This is the worst case scenario. Okay, and why do I say that? Well, no, we reclaimed support, and then we got rejected. But at least we tried. That's my point, though. It's the same as when the market, or when the reporters ask Jay Powell some, like, questions, and he doesn't answer it clear and concisely. They're like, sir, is one day there going to come a time when we need to pivot? And he'll be like, yes, way down, or no, he won't even say yes. He'll be like, way down the line after interest rates are back down below 2%, and we've slowed the economy. Of course, at some point in time, yes, we will have to pivot. And they'd be like, pivot! He just said pivot! Powell's pivoting! That's like, you still have at least a question. Is there a possibility that one day things are going to get better? One day, things are going to change. But once you have that definitive, which when you break down from support, you say, okay, there's still a chance. We're going to bounce from here and reclaim support and go higher. But once you break down and you backtest and get rejected, that's that definitive answer from Powell. That's I'm not going to fucking pivot. We're not even thinking about a pivot. We're not even thinking about slowing rate hikes. Matter of fact, I might hike another 75 right now. If you ask me one more, I'm waiting for Powell to lose it and just be like, ask me one more stupid ass question and I'll hike 100 basis points right fucking now. I dare you. Dare you to ask me a stupid ass question again. All right, so anyway, XLU looking like a pretty clear rejection as far as I'm concerned. Likely coming down here to 58.58. XLP in the house. All right, consumer staples, another one of our safety sectors. XLU, XLP, trying to keep us safe. We know real estate's not a safety sector right now. This is it. We confirmed back. We said it a million times. We trade the exact same setup a million times. We have a strong uptrend. We break down. We backtest. We lower high. We fail to hold the 200 exponential and simple. We break down to a new low, which we did. The next and final bullish play that we make is a reversion to the mean play. One more back test to the 200s where we get rejected. They're both now pink and red respectively. We have just confirmed into a bear market, a bear trend. I mean, technically we did right here, but you know, on the back test is, again, that's all the uncertainty being eradicated from the situation and the market saying, that's it. We're done. It's a bear market now. So XLP, is it going to hold up better than a lot of other sectors, a lot of other stocks? Well, I mean, obviously, you know, if you were a stock picker, you know, the only thing you're left with now is a couple boogers, you know, because you ain't got no money left. You ain't got no money left betting on these companies that don't have profits. I'll tell you that much. DXY looking strong. Big, thick green candle. Reclaiming the 8 and 21. Again, everybody calling for the top. The dollar's going to zero. Blah, 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 blah. DXY is strong. We're going to see what happens tomorrow. One of two things is going to happen tomorrow. Bank of England is going to hike 75 basis points. And then the market is going to get its expectations. And then DXY will be unchanged relative to that move and the one that just happened today in the USA. But if the Bank of England does not hike 75, they hike 50 or 100, that's going to change because it will be outside of the expectations of the market. So if they hike more, that's good for the British pound, bad for the DXY. If they hike less, that's good for the DXY, bad for the British pound. So pay attention to that, because after reclaiming the 8 and 21 in a very strong uptrend, when the dollar has been just dominating everything, if the Bank of England shows even a flinch of weakness, that's going to skyrocket the dollar back up to resistance. And then again, we'll be one candle away from new cycle highs. So for everybody, once again, trying to be bearish on the dollar, look at that knife stab. Came down here extremely, extremely low, telling us, hey, you know, buying volume, buying pressure, buying momentum, buying intensity, done. Trough, bottom. And we saw that correspond in real time. Multiple green histograms. Stoch start turning up. Knife on top of the stochastics. 821 bull cross. It's the start. It's the beginning. That's what it looks like right before we start trending to the upside. Does it have to? No. But there's a strong fundamental and technical case being built right now. On the weekly chart, 200 exponential above the 200 simple. That back test right there, the one people are calling is the top in the dollar, didn't even touch the 21. We didn't even get to 21 before the bulls stepped in and said, I'll take those dollars. I mean, the buyers ran in. They ran in. They couldn't even wait long enough. You got a bunch of people just sitting there waiting. And then all of a sudden we fall. Don't even get to the 21. And everybody just swoops in like that hungry hippo game. Just grabbing up those dollars. Does that look like the top? Get the fuck out of here. Could be. But I mean, it's not exhibiting topping signals. I mean, you're sure there was a little bit of a sell-off, a little taking profits in the DXY. All green histograms, blue slope line, inside the bullish control zone. Stoch still powerfully angled to the upside. We're threatening the previous 2 monthly, resistance / like open level. I mean, that's it, right? There's a couple wicks above our head. But what did we do? We just ate through some sell orders, consolidated, sold off. Ate through some sell orders, consolidated, sold off. And now here we are right there again. How many sell orders are left? How many people are selling the DXY right now? How many people are selling into a massive monthly bull trend that has not taken place? We have not had the blue 200 exponential and the blue 200 simple anywhere on this chart since they flipped bearish in 1985. 1985. Again, we're talking about 30-year trends right here. Just getting started. We're just getting started in a bullish trend on the DXY. So the dollar relative to the basket of currencies, primarily the euro, but we have obviously Canadian dollar in there. We have some British pounds in there. Got some other sweet loving JPY. And you're like, well, you're just naming off all the shitty ones. Well, no, I mean, that's the ones that are in there. I didn't pick them. It's not my fault. It's not my fault they suck. I didn't pick them. I was born here. I didn't pick the United States. I could be in Europe right now, and I could be one of those guys in Europe or in Canada that comes on and talks, shit about America or whatever. I could be one of those people if I was born in a different place, but instead I'd just tell you guys how it is. And I just happen to be living in the place with the world reserve currency. Is it a sweet advantage that I was blessed to have? Yeah. Did a lot of other people get it too? Sure. 100%. Doesn't change reality. All the people trying to bet against the dollar right now, you're picking a losing horse. Wait, no. Picking a losing bet. You're betting against the winning horse. Because all these other horses only have 3 legs. The XY is the only one with 4. And you're like, dollars suck. What are you talking about? They're bankrupt. They can't even pay their bills. Sure, you're right. We can't pay our bills the traditional way, but we do have the fucking money printer. And we have demand worldwide for dollars. So if you print money and nobody wants it, you end up like Turkey. Hyperinflation. Because nobody wants your trash currency because you hyperinflate it away because you have shitty policy. The difference between the dollar is we have shitty policy, but we got the money printer. Everybody wants our dollars. That's the difference. Turkey had the money printer. Nobody wants the lira. We've got the money printer. Everybody wants the dollars. So until that changes, which you're like, but it is changing. China's selling stuff and Russia and the sanctions. Okay, sure, it is. Call me in 20 fucking years and tell me people don't still want dollars. After that, it gets a little fuzzy. I'll shake the 8 ball up after this. So anyway, for me, when I look at this chart, I say, uh-oh. We don't want to go to 160. That's the world fucking melting down. That's 1985. And the last high, the only other high, is from 2001. Well, we know what that is. That was a big deal, right? And that's it. We're about to retest that. So let's just all hope that we're topping out right here on the DXY for just the future of humanity type sake. You know what I'm saying? I'm not saying it's like the end of the world or anything. I'm just saying that in a future that is bright, the dollar is probably not at like 160. I mean, it might be good for people in the United States, but for like the human race, in my opinion, not a good thing for the dollar to continue surging. And right now, what people don't understand is they're like, oh, the Fed will pivot, the government, they'll do something about it. But you don't understand is this is what they want. It's the same as the whole time when we had inflation in the beginning and everybody was saying about how they're going to crush the inflation, they're going to stop the inflation, and all the inflation is going to... And I was like, they're not going to stop it. That was when, you guys may remember, the throwback to Jay Powell just enjoying his... I was referring to it, I believe the term was as a inflatio. Or no, that wasn't it. I can't remember what the term was. But it was basically Jay Powell just sitting back and enjoying his inflation. If you were the person that has the biggest debt in the whole world, okay, or like institution, whatever, that has the most debt in the whole world, or you work with them and that was your buddy or your partner in crime or business or whatever you want to call, this suspect ass politics. If you have the most debt, you have the most to benefit through the inflation of the currency. So the whole time everybody's like talking about how the Fed wants to get rid of the inflation. I'm like, what do you mean? They've been trying to get inflation for decades. We talked about that countless times about how hard they have tried to get inflation. And then they're sitting here telling everybody how much they want it to go away and how it's transitory and it won't last long. Well, they finally got their wish. And now they're like, oh shit, we fucked up. That's what's going on right now in real time. Powell's enjoying his inflatio, okay? And it went on a little too long. And you know what happened? He got a little too relaxed. He was enjoying it. And then next thing you know, that's right. He accidentally farted. Right in inflation's face. You guys feel it too. The embarrassment. You get like the kind of hot sweats. You don't even know what to say. That's how Powell feels right now. Embarrassed. And now he's not going to be made a fool of. Okay? So now he's kicking inflation out of the room. The BJ is over. He's done. Okay? She better not tell her friends about it either. So he's embarrassed. All right. So moving along. Tesla, threatening the lows, 236. You guys know what that means. The blue 36, the blue 236, 178.34. Likely we're headed down here. If this rolls over. If green 236 holds, there's still some hope. We were talking about the potential for this move in Tesla right here. But obviously, I mean, it's nice to throw up chart trade setups, evaluate them, and then you don't have to take literally every one you see, because then looking back when you're like, oh, I'm glad I didn't take that one, and look what happened, played out, you know. That's why we just a lot of times are looking for that perfect setup. Less is more. Microsoft is next, already at the lows, not even just threatening it, a new low, closed at the lows. The last time, the only time we were down here, we gapped down and then shot up. This time there was no gap down. This happened in real time with live open markets. Ladies and gentlemen, Microsoft is getting ready to let go. We almost got to 0.5 already. Do we just go a little deeper and then we get it at 216? Are we ready for a big leg down? I don't know, but you guys know what it is. Long, long bull market. I mean, this is about as long as it gets. You know, going back to basically 2008 till present. Blue the whole way. Bullish the whole way. Bull market. Bull trend. And now here we are confirming into a bear market, getting rejected off the 200s, putting in a new low. And then everybody else, the winners, the Dow Jones, even the trash bag Russell, the hopefuls, even the hopefuls, the industrials and the hopefuls, back tested the 200s. And what did Microsoft do? It went boo, 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 boo. Meltdown. Trash. Next we have Apple. So Apple almost Tesla'd us, aka shook us out of the trade. Obviously, we took profits at our first take profit level when we hit down here at 140. And then we had to sit through this painful, ridiculous bounce back up. And then you guys heard it in real time. I said, if we start closing back above the 200 simple and we flip the slope back to the upside, I'm exiting the remainder of the short. I'll have taken profits, locked some of those profits in, and then I'll let go the rest, you know, at a pathetic gain instead of, you know, obviously if we would have just closed the whole trade. But now here we are. You know, that's why it's so important to have your entry, your take profit, your stop loss, all at such key levels. Because a lesser man or an unlucky man could have easily gotten shaken out by this. And now here we are, likely to come back down here and then potentially complete the trade setup. And if you don't think there was plenty of other people just waiting to hit these 200s, to get those shorty shorts in, to drop them trials for this next meltdown that takes Apple down to $116, well, you haven't been in these markets long enough, because that's exactly where we're going. Hopefully, probably, likely, potentially. Google is next. Oh no. Oh no, Google, what'd you do? Oh no, Google. So is that it? Another target hit? Another exact target hit? The 0.5? Is that it? Is that a wrap? Brap. That's the bottom? 86.97. Oh, how the mighty have fallen. Won't be long before Google's doing a reverse split. Oh my God. I didn't understand why all these trash stocks. I mean, we did understand. We talked about why they were doing these splits as we're confirming into a bear market. And it was a desperate attempt to get people to basically buy into their stock. Desperate attempt. Say like, oh, if it goes down from $3,000 to $2,000, you know, or whatever the situation is with Tesla, etc. You know, down to $300, then people will buy it. The consumer could get it. But the fact is, fractional shares, who cares? Same pie. So yeah, I mean, we hit the 0.5. That's the better part. That's 2/3 of the leg down too. So we have our leg in, our consolidation, and then our next leg down. A, B, C, that's it. It's done. It's over. Hit support. Now we're going back up. I mean, now that we hit 87, honestly, I mean, the truth is, the back test on that is the previous fib. Now, I mean, The back test alone is 14%. Man, I wish Google wouldn't have just literally hit it like 2 days. Wish it would have took its sweet ass time to get down there. The problem with Google right now, the way I look at it is, we basically just started another leg to the downside on some of the stuff. And so when we like immediately hit our target right off the bat, as soon as the leg starts, even if Google's not going to go any lower, which it might, definitely might. Even if it's not going to go any lower, there's more likelihood than not that basically everything else is going to have to catch up before it can all kind of rally up together. So everything else might take another couple days or weeks or months to hit support levels. Meanwhile, Google's just like, oh, I'll meet you guys there. The next fucking day, down ridiculous amount, 15%. Google's like, oh, I win. Now he's got to just sit there by himself. Or maybe go lower. I don't know. So we'll see. You guys know how I feel about a lot of these, the old magma stocks. Heard some idiot on CNBC trying to call them the mama stocks. You're going to try to call them the mama stocks? Oh, really? Take your little mama, ball her up, and throw her in my fucking hot pit of magma, bitch. Because mama's nothing. Magma's where it's at. Microsoft, Apple, Google, Meta, Amazon, motherfucking magma. You want to come at me with mama? Mom, you better call your mama, you fucking bum. It's magma, bitch. Don't at me. I hear people saying that. I don't know what it means. I don't have social media, so. But I'm sure it's a way you diss people, so don't fucking at me either, bitch. Bam. Mic drop. All right, Meta is next. Obviously, very, very strong. Very strong stock. Good investment. It's good investment. Oh, God. Guys, I was wrong. I just Jim Cramered it. I know we're down 50%, but no, I'm sorry. Hang on. I don't want to exaggerate. Because if I'm going to be a prick to people, I want to be accurate. Guys, I know we're down 76%. I was wrong. It's because I don't actually use technical analysis or even fundamental analysis. I thought the metaverse was a thing. I didn't think people wanted legs. I thought they wanted to hang out there so they wouldn't have to shower. I'm sorry, group members. Fucking Jim Cramer, little bitch. 75 fucking percent for this trash company. When they changed their name, I went on a whole tirade for like 13 minutes about how this was going to crash their trash stock. I mean, granted, they could have already crashed anyway, but I mean, god damn if that didn't play out in real time. People are like, oh, this is a good value. When do we buy? I mean, if you're going to try to take a stab, which look what happened to the people that tried to take a stab at 120, they got wrecked. So this time it probably is a good, you probably can catch a knife on this one, at least get some kind of reaction. Because all the people that just got wrecked right here that are trapped from the gap down are going to try to double down or buy the dip right here. So maybe now at least there'll be some kind of bounce. It's also the 0.5 for like the macro entire life cycle. Literally back in the dinosaurs to right now. So yeah, I mean, from 82, God, that really will be a fucking face ripper rally. Everybody will be like, the metaverse, I fucking knew it. Mark Zuckerberg really is a lizard. I'm betting on Marky Mark and the Lizard Bunch. He's got a new band. Did you guys hear about Mark's band? Marky Mark and the Scaly Bunch. 43% for a back test. There's definitely a trade setup to be had there. But again, I mean, I don't know. I mean, God, at some point in time, they got to just come out and be like, hey, we're just fucking with you guys. April Fools, we're changing the name back. Matter of fact, we didn't even really ever change it. We were Facebook the whole time. That Meta thing was a joke. We were just fucking with you guys. They're like, it was for taxes. We were trying to like pull a little something on the, just whatever. We're switching back. It's Facebook again now. I mean, I honestly think that's probably the best thing they could do. Like start erasing the like Meta thing. Be like, hey, we'll put like half as much money in the metaverse. Maybe like even a quarter. We're going to reduce the metaverse thing a bunch. Okay. We're going to reduce that. We're going back to Facebook. All right. We're going to stop with the bullshit. I mean, I think that honestly would really just make people feel good about the stock again, and people would at least take a stab at it. I don't know if they would know what ticker to buy, though. That's the thing. They're like, fuck, what do we even call it now? And they're like, it's new book. Version 2. So Amazon, the last of our magma, not mama stocks. I mean, it looks terrible. New lows, as expected, as predicted, as discussed. Oh, God. It's getting nasty. Can you imagine just being stuck in these things? I honestly can't even imagine. Count your lucky stars if you're not one of these losers. What a fucking round trip. God, that's terrible. So where's it going to go from here? I mean, we're at the 886 now. It's like a couple dollars away. 89.70. It's $3 away. I mean, who even cares at this point in time? Down from 200. I mean, it's no meta, but it's definitely down. If we're going from the swing low from March 2020, we're about to hit the 886. You guys know, we talk about it all the time. The probability of reversal at the 886 is so low that I literally count it as zero. You know, it happens every once in a while. Sometimes it'll happen in between the 886 and the 0 or the 1. But the truth is, once we violate that 786 and start closing below that, that's a wrap. You know, we could call it maybe a double bottom, but I mean, gee. Yeah, I mean, you got to just look for that double bottom. Even if it doesn't hold for a potential bounce, maybe when we get down here. Again, we'll have to see what the world looks like when we get here. I mean, could be tomorrow, could be in a few months, but tech is wrecked. We talked about Amazon ahead of time. You know, I went on that little tirade, and I know, guys, it's hard to keep track. You're like, you go on like 4 rants or tirades or like, you know, strange analogy trails down like a dark hole every stream. And look, if you can't hang with me when we go down a dark hole, it might not be the spot for you. Might not be the place. But if you can, you're going to see some shit. So, I mean, we saw what happened here. We talked about this in advance. We talked about what was, you know, essentially the difference between reality and the twisted fucking reality that the world is trying to present to people. And the twisted reality is Amazon has lost in 2022 Q1. They lost $3.8 billion. They took in $116 billion and lost 3.8. And then in Q2 of 2022, they took in 121 billion and they lost 2 billion. So going into Q3 earnings report, they were already down 5.8 billion. They're like, all right, we're halfway into the year. How's things going? Pretty good. Oh yeah? Yeah, like $250 billion in revenue. Wait, what? How much even is that? For us people that aren't good with big numbers, that's $250 billion in revenue. Oh my God, you're killing it, dude. That's crazy. Congratulations. Oh no. Oh no, no. No congratulations necessary. Because we lost $5.8 billion. So what is your job? Are you selling dollar bills for 90 cents a piece? Congratulations. You sold out. Wow. I mean, that's the difference between perception and reality. So if they just did a net income, another 127 billion in revenue in Q3, which we talked about, and they had a net income of 2.8 billion, that means that canceled out some of the losses from Q1. We're still down $1 billion from Q1 and then $2 billion from Q3. So Amazon's down $3 billion right now. They just had a profitable quarter with 2.8 billion. So let's say they match that quarter and have another profitable quarter with $2.8 billion going into the end of the year. Congratulations, Amazon. You did it. You finish off barely negative for the year. Barely negative for the year. This company is priced at, well, it was when we did our last little tyrant raid, whatever this crap is called that were happening right now. It was at 100 and what, 26, I think it was. That was a few days ago. It was at 126 price to earnings ratio. And now it's down to 88.8. Under compression. I mean, and what's going to happen if it puts in a negative year, which seems likely to me. It seems likely. Let's look at what they think's going to happen. Okay, they think they're going to have 147 billion in revenue. So, I mean, they could see a positive year. They could pull it off. They got a lot of leverage to pull. But does it surprise me to see Amazon a couple days later? That was literally right here. Does it surprise me a couple days later to see it down 23%? Nope. Nope. Am I going to do one of those told you so things right now? No, I'm not going to. We're just going to move on. All right. Let's take a look at some cryptos. All right. If you're in the chat right now, make sure to say what's up. Smash that like button. Obviously. I mean, subscribe. Unless you're afraid. CW says, if the meta investment doesn't work out, there's always Social Security as a backup. Bro. Yeah. And if that doesn't work, man, I know a guy, he might be able to get you in on the UK pension funds as well. What's up, Crypto Deli? Good to see you, brother. Todd Schultz in the chat. What's up, my dude? Hopefully you're doing well, brother. All right, let's keep rolling. Let's talk about some cryptos. Now, keep in mind, too, okay, because I see people are paying attention. People are interested. They're watching right now. Look, I'm going to tell you right now, just because I'm mean to your favorite crypto or I say something mean about it, doesn't mean I don't like it. Doesn't mean I don't like crypto or stock or whatever. It just means the technicals look like trash. The chart looks terrible. That's why I'm being mean to it. That way we remember that it's still ugly. One day it will be beautiful again. Probably. Maybe. Hopefully. Less likely with cryptos. Actually, who even knows? I think at this point in time, any investment is pretty much a coin toss. But if the chart looks ugly, don't be mad if I tell it how it is. So Bitcoin on the daily, we did get the 821 cross back to the upside. You guys know I was bullish basically from the 4 hour. We had momentum in our favor. We had the Stoch trending to the upside. We had the 821 cross. Unfortunately, and this was taking out, this was a key level. The next key level to watch was that previous high at 22,386. Talked about the probability of that back test, of the potential move back up to retest the 200 exponential and simple on the daily, which Bitcoin has been unable to do since back here in March of 2022. So a very, very long time. And eventually, if you go sideways long enough, we'll retest them regardless. Obviously, that's not what we want, but Ethereum almost got there. You know, Dogecoin the other day shot up and hit it. A couple other ones got it. Even some of the trashiest ones back tested theirs. But Bitcoin just has been unable to do so. And now it looks like, you know, we're back testing at 21 for now. We need to hold this green trend to the upside. If we want any hope of a situation like this, we need to stop the bear cross from happening. And when I say we, I mean the bulls. I don't care, but the bulls do. So we did leave the bearish or bullish control zone. We just kind of touched in again, and then it's kind of breaking down. Looks like the Stochs are getting ready to cross back to the downside. We talked about why this looked really toppy at the time. Matter of fact, you know what? Let's take a look at the 4 hour, because this is exactly what we were discussing on the 4 hour. I told you guys in advance I was expecting a higher push right here and a double top. Obviously now in hindsight, that's exactly what happened. And then we talked about essentially the neckline right here, the back test of that 20,000 level, which we came down to and touched just now. But how did we know this was going to happen? How did we see it coming? Well, it was very, very clear what was taking place. We hit this first high right here, and it corresponded with price action on the stochastics and the TDMACD as well. And then obviously we came up here, we put in a higher high on price action, but we see a much, much lower high on our histogram and on our stochastics. Bearish divergence, and then we know likely we will then test the lows, which we did. We come down here, test the lows, got a little bounce. Then we had that, you know, little pump, that liquidity event today, the little fake out, the little fail breakout, whatever you want to call it. And now here we are. The only thing that pivoted was your balance. And not in a good way. Unless you were short, and then you probably just crushed it. But we're at support now. We're just off the 200s on the 4 hour. Seems likely after this much downside pressure, after the bearish divergence playing out, it seems likely we'll find at least some kind of temporary support around this level. we're going to try not, the bulls are going to try not to make a lower low right here. So watch that level, 20,070. If we lose 20,070, we're going to 19.9. If we lose that, we're going to 19,680. I mean, pretty tight little range there on the 4 hour. But let's be real, everything is tight in Bitcoin right now. It's tight like a toy guy, because all we ever do is just go sideways. We're coiled up like the spring. The problem is, I think the spring is pointing down. So we'll see what happens, but it doesn't look good on the daily. Let's take a look at our weekly and monthly, just because we are in a fresh one. We got the weekly close last week above the 8. That was definitely a good sign. Next target to upside would be the 21 if we can see continuation. That puts us about that 22,461 target. And then we got a little chop on the way up here to about 26. A bunch of green histograms threatening the slope line to cross above it. It's definitely a good sign. We did cross back into the bearish control zone, which is not ideal. So we were very close to getting a hard buy signal, which is bullish on the weekly. Instead, it crossed back negative. So potential that we could actually push lower here and then print some bullish divergence and then finally get an aggressive move back up to the 30s. The problem is, you know, if we take from the 20s to the 30s, that's great. If we go from 20 to, you know, 16 or 14 and then to 30, it's going to shake a lot of people out. You just got to make sure we're not that people. No, that's not right. That person, those people, either would be acceptable, but definitely not that people. Bitcoin on the monthly, at the lows, looking rough. Obviously, just the start to the month. I mean, this was an okay monthly candle. I mean, it was green, so that's good. Not a lot else we can say good here. All red histograms, red slope line below the 0 line. All 3 of the TDMACD indicators pointing down. You know, obviously everything very, very bearish on the Jewel Thief. And then obviously 821 bear crossed. The only thing we're missing, obviously, just because Bitcoin hasn't been around for that long, is the 200 moving averages on the monthly time frame, which, you know, realistically, what you could do is put something like the 100 on or something like that, so you at least have another moving average to look at. But the fact of the matter is, if the chart looks like this, the moving average is up and to the right, and that's all that really matters. So we are still in a bull trend on a monthly time frame, but dear God. But I mean, if you want to F that up, keep doing what you're doing, Bitcoin, because you're close. And the weekly, realistically, we lost a 200 exponential. We cannot hang out here much longer. The 200 simple is almost flat. I mean, there's still a little bit of an uptrend, like a little bit of a curve to the upside. But I mean, it's about as close as it gets to flat. So if we come up here and we test it, or we don't test it, if we don't reclaim 24,000 in the next, few weeks, this is a confirmation into a weekly bear market. And we know what happens when you confirm into a weekly bear market. We can look at stuff like Chinese stocks and look at the weekly on them, and it's very clear. That's when the algos flip, and it's Dump City in this bitch. It's the bloody waterfall, the red wave, and I'm not talking about politics, people. I'm talking about dollars going up in flames. Ethereum on the daily. So we got almost up here. I mean, we talked about touching tips, but Ethereum just couldn't pull it off. It was like one blue pill short of just touching tips right here, but just couldn't get that extra little push. Oh, now they're flaccid again. It's rolling over below the 8. Still got this 21 to hold it up at about 1,468. It is getting a hard sell signal coming out of the bullish control zone. Multiple red histograms getting rejected off of 200 exponential and simple. Let's be real, what's probably going to happen. This is going to go lower, okay? But there's a good possibility we do get one more push up here to touch that 200, or both of them even. But I'm going to tell you right now, there's literally going to be orders just waiting to short, if it even happens. And then after that, straight to zero in one candle, give or take. Weekly total market cap, bounce at 200 simple, getting ready to back test the 200 exponential and the 21. 1 trillion. Look, we know what's up. Go figure. Crypto market cap is going to try to reclaim 1 trillion. It's a big deal. Bunch of green histograms trying to threaten the slope line right now. It's do or die. It's do or die. We've had a couple setups where crypto had an opportunity to rally. It looks like Bitcoin is about to just roll over and take it, okay? But I think some of these altcoins are ready to fucking fight back. They're looking a little feisty right now. Bitcoin dominance on the weekly, this is everything, all the cryptos, including stablecoins, including shitcoins. It's got Bitcoin in there. It's got a whole mess of coins we've never even heard of, okay? But the fact of the matter is, Bitcoin's down to 40% of that. It's getting its dick kicked in. And we know that there's two ways Bitcoin gets its dick kicked in on this chart. The first way is altcoins, aka trash coins, aka, you know, the crypto mess, whatever you want to call them. They strengthen. That makes Bitcoin dominance go down. Alternatively, the stable coins. So we know right now the DXY is looking strong. We know a lot of people are trading, owning, investing, partaking in crypto speculations worldwide. And one great way to protect your purchasing power when the DXY is very, very strong, or the dollar is, you know, going parabolic, is to, you know, buy dollars. And an easy, inexpensive way to do that is to buy a stablecoin that's denominated in dollars. So realistically, if the dollar's strong, Bitcoin's going to lose Bitcoin dominance because of what we just said. And also, if trash coins like Dogecoin are strong, it's going to lose Bitcoin dominance. So honestly, Bitcoin looks like it's about to be in rough shape right now. And then if we exclude those big boy stable coins, we see actually Bitcoin looks stronger compared to the alts. But again, looking weak. It had a big opportunity now to move up here, and it didn't. It rolled over like a little B2B. So realistically, Bitcoin dominance on this chart probably coming down to 44.74, possibly putting in a new low compared to all cryptos. So Bitcoin is struggling right now. Here's the weird thing. Bitcoin is struggling while crypto goes sideways. I guess kind of up. It's been kind of up over the last couple, like, I don't know, weeks or months or whatever. I was going to say it's kind of weird that it's struggling while we go down, but we're really not going down. We're not putting in new lows. So I guess that makes sense. People are trying to load up on their favorite altcoin for the big move. Similar to what we're seeing in the Russell 2000. It's almost like there's some sort of psychological aspect to this. And if someone could actually quantify that and then use it to trade, they would have a huge advantage. And if you haven't gotten my indicators for free, I highly recommend you go down in the description and check them out, because someone has. XAU, gold on the daily, looking like trash. We're at the lows, looking ready for that trap door. Does not look good. You know what gold has looked really good at? Is telling us the truth consistently this whole trend over the last few years. Gold has literally been our lie detector, okay? The magic 8-ball predicts the future. The gold is the lie detector. It's absolutely fucking beautiful. And right now, gold is saying, I mean, it's looking like trouble. Silver, looking like trash. Definitely looking like trash. GSG, GFCI Commodity Index, weighted energy. I mean, here's the thing right now. This only looks as good as it does because it's overweight energy. If we looked at just the commodity index, it looks substantially worse than this. And realistically, like, oil's not even looking that great right now. Nat gas is looking better. We'll see. We'll see what happens here. LNG pushed up and put in a new high, which was what we predicted. Now the question is, are we getting ready to print that third drive, that bearish divergence? So we have a high here, we have a lower high here, and now here we just crossed a bull cross right here. Got a pretty aggressive knife, put in a new high on price action, and then, you know, followed by a rejection indecision candle right here. I mean, if we were going to top out with another drive of bearish divergence, as predicted, this is what it would look like. So, I mean, I don't know. Maybe it doesn't happen, but I mean, sure looks like it. And I mean, if this thing decides that it wants to let go, I mean, just a retest, you could put in a higher low than this previous low back here. And we're talking about 16%. And it ain't going to be like 16% over like a couple months, like percent a day here and there and a little bit. I mean, we know how these energy stocks move. Everybody's on one side of them. Everybody's on these energy plays, all or nothing. So the second it reverses, you know, stops getting hit like crazy, liquidity issue. Everybody's a buyer. There could be a million, there could be so much volume, but everybody's buying. It's all buying pressure. So if selling comes in, 16% in a day. If it gets real nasty, we could see it down here like 135, but 150 looks real likely. A little back test of 200s. This is starting to look like, obviously consolidation for now, but got to be careful this doesn't end up looking like distribution. Now, let's say the opposite happens. Let's say that it was actually accumulation, reaccumulation, and that this was actually, not a failed breakdown or spring. And that was actually the retest of the low, the spring, stop loss hunt, and then boom. And then now we're knocking on resistance store, getting ready to go parabolic. That is very possible. But look at this, how everything is super bullish. Arguably, you could say, priced in at resistance, printing potential, third drive, a little bit more of that bearish divergence, LNG, Cheniere energy, ready to take a plunge. Find out Wednesday. Nope. Find out. Wait, what's our next stream? Find out Friday after earnings. It's probably going to be really good, though, honestly. Tell you the truth. It's just a matter of, is it really good compared to expectations? MOS is next. Mosaic Company, V. A little fertilizer action. We talked about this quite a bit. We still have a high. We still have a low. We still have a lower high. We still have a higher low. So until one of those things changes, I'm pretty neutral on this. We're also just kind of bouncing between 200 exponential and simple. Been in a pretty aggressive bull trend. And now we're starting to lose that trend. So, I don't know. Should technically favor to the upside because it still technically has blue 200s. But man, if it doesn't look like it's ready to put a new low in. $43. What is that? That's about a 15% move. Again, earnings coming up. Still a decent amount of earnings left this season. So, URNM, Uranium Miner ETF. It just sounds like a nerd stock. Uranium Miner ETF. Have you heard about our savior, nuclear power? It's not as bad as everyone says, It's getting better. Daily chart. Look, we're bearish. We're below the 200 exponential and simple. Oh, you said mean stuff about uranium. Unsubscribed, asshole. All right, whatever. Sorry. The truth is, it's in a bear market. URNM pointing to the downside. Okay? CCJ was lying to us for a bit there. And now look, below the 200s. 200 simple is still bullish for now. But if this thing doesn't look like it's ready to roll back over and dumpy dump, what happened? Gap down, back test, backfill, and continuation. Bye, guys. See you lower. Tilray on the daily. Oh, man. It shot up here pretty freaking aggressive. Should have expected that this is what was going to happen. Oh, actually, I think we talked about it a bunch of times. But, I should have expected, as in, should have just front ran that take profit zone. It did definitely throw me off at least slightly that we took out this previous little gap up high, or at least like threatened it. It looked like it was going to go higher. Not surprising though. Not surprising. So realistically, probably going to end up break even on this one, but definitely ain't going to become a lahu zahur. Could still go up there though. There's still some potential. I don't know. We'll see what happens in the actual markets. It's going to be tough for anything to be bullish right now, especially something that's been the biggest loser for like a decade. Well, maybe like 4 years, 5 years. Since like 2018-ish. Pot stock's been getting wrecked. I know them poor pot stock owners / all-in people are probably just like, how did I pick the worst investment ever? You didn't pick the worst one. There are a couple things that went to zero. But goddamn if you ain't close. Bava on the weekly. Speaking of what happens when a weekly chart flips bearish right here. Okay? That's when the red and the pink show up. Full on fucking meltdown. And people are like, buy China. It's a great investment. I'm like, what? It's a great investment because what? And they're like, it's down 90%. I'm like, oh, that's how we decide if things are good investments. If you like show up to look at a house, okay, let's say I'm like a real estate agent or whatever, and you're looking for a house, and I'm like, hey, you want to come look at this house? And you're like, oh yeah, sure. I'm like, oh, it's $1 million. And you're like, okay, yeah, I'll check it out when I get there. Like, it's a little over my budget, but I'll take a look. And then you're like, hey, you know, this is actually a little over. I don't think I can afford it. And I set the house on fire and burn it 80% to the ground. And then I'm like, hey, what do you think now? You want to go 200,000 for it? That's not a deal. It's fucking burnt down. The house is burning to the ground. It's not a deal now because it's $800,000 off. You're like, yeah, but it's on fire. There's a reason it's there's a reason it's $800,000 off. It's burning to the ground discount. Okay? And you're like, well, but China's not going to burn all the way down. Really? I think they were saying that at 198 and now we're at 64? Unsubscribe. Fuck you, racist. Neo is next. Oh, man. I'll skip this one. So I mean, you guys know what it is. EWZ, Brazil. Okay. Still just trading in the range. This thing has literally been doing nothing. It's back on top of the 200s, which is good. It's kind of just chopping around in here. We'll see. There's definitely some potential for some upside here. But, I mean, it's not doing anything right now. You know, probably a little extra volatility with the elections and everything going on. Maybe that cools down a little bit. Oh, I meant their elections, not ours. There's definitely some volatility with ours, too. So on to the... saw the ticker and it made me sad. I'm just kidding. This was a request from someone. And, you know, as always with Solana, I got to just say, of all the cryptos in all the world, just anyone but this one. Anyone but this one. Solana sucks. It's trash. It's literally the worst crypto. Like, you could literally make a crypto right now, and it's backed by absolutely nothing, and it just has a name, and it's already better than Solana. And you're like, that's not true. You don't understand network effect. No, it is. Because at least you're not breaking and getting hacked all the time. If you're going to do nothing, you might as well do it good. Don't lose everyone's money and do nothing. Just do nothing. Or just do something and then also don't lose everyone's money. So no, Solana, no. No. If I had a little spray bottle, every time somebody requests Solana, I would just shoot it in their eyes or their mouth. A little bit of lemon in there too so it burns. You're like, oh, every time I say Solana, it burns. And I'm like, yes. That's what it's supposed to do. Hopefully you'll learn one day. There's lots of other channels where you can ask about the worst cryptos, but not here. Cheese is next. Chili cheese dog. I mean, this looks strong. We talked about it. Found support on the 200 simple. It's back above 200 exponential. 821 cross to the upside. It's threatening the highs right here. Could it top out and put in like a little demented kind of head and shoulders? Yeah, it could. Looks good though. Momentum in its favor in the bullish control zone. A bunch of green histograms. You know, this is one of the cryptos that's like, hey, look, Bitcoin is a boomer coin. It's an OG bitch. And whatever I am, whatever Chili's is, okay, chili cheese dog, says, I don't really care. We're going to the moon. Now, granted, they're still down a shitload. I mean, it's not like this thing is like crushing it. Okay, it's down like 60%. So it's not doing good. But relative, it's doing good. It reclaimed the 200 exponential and simple. That's a good sign. We did breakdown from that channel. Got a decent retracement. Can't remember how deep we went on the chili cheese dog last time, but yeah, okay. So we hit the 0.5 pretty much like perfectly. Better than I'm able to click. So yeah, we hit the 0.5 almost perfectly right here. You know, found support at the 382. Lines up perfectly with the yellow 382, which is from top to bottom. And the 200s. Reclaim the 0.5, aka the green 236. Yeah, looks like we're getting ready to threaten the highs. Back test the 618. And then at that point in time, we have a low. We have a high. We have a higher low. Likely putting in a higher high. And we know after the 618, next step up, 786, 38 cents. 0.38 dollars. 0.38. You're like, $38? I'm all in. Oh, he said 38 cents. Damn it. So yeah, 38 cents for a chili cheese dog. That's like 1980s prices right there. Load up. Descending resistance right here. We got back on top of it. Looks okay. Honestly, it does. Momentum in its favor. I mean, it's going to run into some clear resistance here in white. Ooh, can I say that? It's going to run into some resistance here in the line without pigment at about 30 cents. So that's what I would be looking for my next target. 25% move up here to the pigmentless line at 30 cents. And then after that, if we clear that, I mean, the best case scenario would be we move up here, we hit 30, we come back down to 27, we find support, and then boom, bang, measure move up here to the 786 at 38 cents. Cha-ching. Algo, last but not least, some fundamentals, apparently, for algo. I did recently hear it being advertised on a podcast that I watch. So they're doing things. Sponsoring some big events as well. There is a potential bottoming setup right here, I suppose. Bullish control zone, green histograms, blue slope line above the zero. 821 bull cross. So close to just touching tips right here. I mean, it's got to be very frustrating. I know I get frustrated when it comes all the way up to my target and then just doesn't quite. Just, oh, so close. So yeah, is this 38 cent crypto day or something? What the hell's going on here? That was our target up here, 38 cents? Hang on a minute. All these penny cryptos. Yeah, so I mean, it seems likely that it wants to push up here and at least touch that target. Obviously, the other 200's far further up here. 39, 40 cents. I mean, if it clears this neckline, which is kind of just jank, realistically, that's the trade setup right here. If it gets back up to 39.5 cents and starts hanging out above the 200, likely it hits the other 200, but realistically, that's the trade setup. You pay a little premium because instead of getting in at 36 cents, you get in at 39 cents. But you've already gotten through key resistance and then much more likely to get a legit push up. Now, is it possible this trade setup just completely underperforms and it just pushes up like 18%? Yeah, and it's really not worth it then because it's realistically like you would have to take your entry basically where we're at right now with less certainty. I mean, you still pull off a decent setup though. 7% stop loss. I'm sorry, 9% stop loss, 28% upside, 3-to-1 risk reward setup. It is a bear trend, obviously, but you basically would be playing that we break above the 200. Which one of two things is going to happen. We're either going to break above it and just shoot right up here, skyrocket to the upside, or this thing is going to smack us like we owe it money. And by we, I mean whoever owns it, not me. Yeah, so got to be real careful with this one, but pretty close to confirming some pretty juicy stuff here. So yeah, that's it. We made it to the end. Yeah, we did it. Made it. Yeah, hooray. All right. So yeah, I guess that's it. We'll wrap right there. Next, what do? We got a stream on Friday, so take some requests for Friday, group members, and live participants. If you have any requests, feel free to drop those next week. But we're gonna go ahead and wrap it up there. Appreciate everybody tuning in today. Obviously, it was a big day. Everybody was leading up to this big Fed meeting, and the truth is, man, I don't like him. I don't love him. I don't like the institution at all in the Federal Reserve. But the truth is, handled it very well. Very, very predictable. Very clear about what the market should expect. And that is not a pivot. Not anytime soon. It's the opposite. It's much higher rates. And to tell you the truth, if the stock market keeps acting how it's acting and holding strong, that's the best case scenario. That's how you get the soft landing. Is the stock market stays strong and the Fed gets the job done. The problem is, the Fed is looking for wealth destruction. So is it possible that the stock market could hold up and then the housing market, wealth destruction over the next like year or whatever, we just stay high for long, and that's when we see the wealth destruction take place? Like, is it enough? Did the stock market sell off enough? Is it okay now? It can just hang out and go sideways, and then the housing market has to do its part now? It is possible. It is definitely possible. And we don't want to rule stuff out by any means. So we will have our eyes open, be clearly watching these things on the regular. You guys know we stream 3 times a week, every Sunday and Wednesday from 8 p.m. till like 9 or 10. And then, of course, every Friday, 11 a.m. Eastern Standard Time for a couple hours for our weekly market wrap-up. Speaking of wrap-ups, about to wrap up this stream right now. So if you enjoyed it, make sure to smash up that like button. If you didn't subscribe yet, it's free, so don't be a bitch. And if you did, thank you. But that's it for today. Obviously, none of this is financial advice. I'm not your financial advisor. These markets are extremely Sorry, I started reading. These markets are extremely volatile, so please do your own research and trade responsibly. I'm putting all my money on a Christmas pivot. There you go. A Christmas pivot. I don't know what they are, man, but if they're that expensive, maybe I could help you out with one. A Christmas. Oh, you're talking about the Fed with the Christmas pivot? Oh, you better be careful on that one, bro. And look, the truth is, don't ever go all in on anything, all right? Except for Reese's Cups. They're pretty good. You might want to go all in on those, But no, seriously. Be real careful. I know everybody's looking for this big Santa Claus rally and everything. The October rally in the Dow was nice. It was pretty pathetic in most everything else. Just be careful betting on an outcome based on previous years or history or fundamentals or statistics or, whatever works best for you and your own personal wallet. Because honestly, I just don't see it right now. I don't see a reason for equity markets to rally. If they would have stayed a little weaker, a little longer, it would make more sense to have a strong rally going into the end of the year. But it just doesn't seem probable right now. And if you look at statistically what the market's pricing in, right now it's like pricing in that we're going to be over 5% in March. So how are we going to get a rally, as we hike another 75 basis points and then, at least another 25, 50, 75, first thing next year? It's going to be tough. It's going to be real, real, real tough. Doesn't mean it can't happen, but it's going to be real tough. And we're probably going to find out what happens over the next couple of days. The best thing that can happen for an end of the year rally, if that's the situation we want to see, ideally or potentially, would be weakness until like beginning of December or something like that. Just a month of just getting our dicks kicked in, just everything looking weak, nobody buying the dips, down 15, 20%. Then we can start talking about a Christmas rally. But I mean, we just rallied. We've been rallying. It just doesn't seem probable right now, but it'd be a lot easier. I'd love to make some of that end of the year cash. But again, we don't want to get ahead of ourselves. That's it. That was our Fed meeting. That was our news. That was our stream. Obviously, none of this financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. It is 9:40 p.m. Eastern Standard Time on 11/2/2022. And I, of course, am Crypto Trend Trader. And I'm getting the F out of here. Everybody have a great night. Peace out.